All right, welcome back to Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. I think the black and white jacket give that away. So to some of you, it might be good news. To some, it's bad, but I'm here for the rest of the show. Marlon's taking a break, so I'm filling in. Here I am. So next 2.5 hours, you got me. Let's talk about the markets. Now, I did a radio show earlier this morning, and I already know it's kind of a bruiser again today. So it's it's an uncomfortable one, as we could say, right? Let's take a look at this big board behind my big fat head. Let's see what we've got going on. We've got a set market that's down 12.75 cents to 543.5, and about a 12.5 cent loss in the D's. That's the new crop to 548.5. And boy, oh boy, we've come steaming off. We're about 6 cents off the lows, which I guess is good, but still about a 13-cent loss across the board when we talk about corn. So corn down 13. What are beans doing? Well, they're down about 25. Let's talk about August. That is down 25 cents. 13.70.5 is last there. Go out to the Novi new crop. It's a 23.5 cent loss. 23.25 cent loss now to 12.71 even. So between, say, 22 and 24, 25 cents lower across the board there. So basically double the losses of corn right now. We go over to the wheat. Let's see what we've got going on in Chicago. That's down 21 cents across the board. Let's go to the SEP. That's off 21 cents to 6.78 even. We've got the DES off 21.25 cents to 6.95. And that continues as you go out the deferreds in that curve. So that's the Chicago wheat off about 21 cents. The hard red in Kansas City, that's off about 27 cents. We'll go to the SEP. That's 27.5 cents lower. That's trading at 8.12 even. That's the last. If you go to the DES, it's 26.5 cents lower to 8.14. So again, about a 27 cent loss across the board there. Let's take a look and see what we've got going on in the spring wheat. That's Minneapolis. Down about 20 cents, 20.25 cents in the front month. That's 8.25 is last in that SEP contract. DES, that's down 20.25 cents to 8.33.5. So that's your wheat prices. They're all getting kind of hurt at the moment. Let's take a look at cotton. Cotton's up. Here we go. Here's something that's got an up arrow. It should be green, not yellow, but anyway, we'll go with the yellow. We'll take an up anyway. Whatever color it is, we'll take an up, right? 59 points higher in the D's to 77.65. Let's bring in our next guest analyst. It's going to be Riley Schwieger. He's with CHS. Thanks for being on the show. He's up in Inver Grove Heights at the mothership, the home office, right? That's where you get all the free breakfast and free lunch every day, right?
Absolutely.
All right. Yeah, you've said that with such vim and vigor. I think I might be lying. All right. Anyway, yeah, you kind of it's a tough one. What are your thoughts here? Obviously, some precip snuck in overnight, and it looks as though the market's taken that to case.
Yeah, well, energies, I would say we're following suit to start the week off here, but we got an EIA inventory report this morning, and now we're well into the green. Really trading a higher than expected crude inventory draw, which follows suit to last week. That's 2 weeks in a row where we've seen a really steep drawdown. This week it was 9.6 million barrels, and we saw a similar number last week. We saw that SPR come off 1.4 million barrels, and then we saw exports really driving this drawdown up 17% week over week. 5.3 million barrels per day of exports last week. A little bit bearish on the product side. Gas inventories were up. I would say most importantly, demand is still up 3.8% over year ago levels. Diesel demand, not quite the same story, a little bit more tied to the macros there, off 16% week over week, but still relatively steady to a year ago. Like I said, a green day, but some things to keep an eye on. Gulf Coast, part of that heat wave down south, that heat can put stress on refineries. We did see inputs down there off 3% last week. That's going to extend it into this week, so something to keep an eye on and can be bullish for your refined product prices. And then we do have SPR releases wrapping up this week and a Saudi Arabian output cut starting in July. So a little bit of a shift in the dynamic for energies.
Sounds like it. I mean, and if I heard you right, you said the SPR, we took 1.5 million barrels out last week. Is that right?
Correct, and that should wrap up this week, assuming they get everything out, and then we'll start buying again in August.
So we'll start refilling it again in August, right? And we only have about 260 million to refill, so it's no big deal. We can do that.
It's a long journey.
That's going to be
a long path ahead.
That's going to be a 5-year deal. All right, I appreciate you coming on. Lots to do there. Thank you very much, Riley Schwieger. He comes from a CHS in Inver Grove Heights, Minnesota. I'm going to go away. We're going to take a quick break. We're going to come back and talk livestock with me, the Cow Guy, after this.